I want to get your take on the Fed decision and also specifically that comment from Jay Powell. Did he pretty much close the door on all these people that watch all these different reports? Did he pretty much just finalize and say it's jobs and inflation, that's what we're watching, that's going to determine it?
So first, I think they did obviously the right thing by signaling that they are aware that inflation has been stickier than they had expected. I think he's right to say right now their primary job is inflation and getting it under control, and it's become more difficult. So I thought the message was roughly the right one. Obviously, it was important to take off the table right now, at least, the possibility of a rate hike. I think at this stage it's unlikely, but we'll have to wait and see if the data holds, and that will drive what the Fed does.
All right, so I think you're basically saying a hike's all but off the table. It's a possibility, but pretty much off the table. His comments yesterday, does that push out the idea of cuts? Does that push it out even further than it's already been pushed in your mind?
Oh, I think it absolutely does. I think there's been a disconnect between the market and the Fed for a period of time. When the Fed was thinking maybe 3 cuts, the market was thinking maybe 5. When the Fed was probably thinking a June start, if at all, the market was thinking a March start. So I think that's where the risk is right now. So yes, he's certainly pushed out. And I think it's 50-50. There may be no cuts this year at all, depending on the incoming data. And the data have surprised us consistently in one direction, i.e. inflation being stronger than we had thought.
Really? No cuts at all? Even after that weaker than expected GDP report and some of the other reports, we're seeing that it appears that rates do seem to be taking hold in the economy, at least in some areas. You still think it's possible no rates at all this year?
It's possible. I'm not taking it off the table. I think it's too early. To be fair, inflation has been hotter than has been expected. You heard Chairman Powell saying it's moved from just sort of noise to signal. The way he phrased it is it's going to take longer for them to gain confidence. I'm only adding the possibility that they may not gain confidence for a period of time here. There are a number of inflationary forces that have yet possibly to pay through. As an example, energy prices, there's some risk that might go higher. Obviously, the labor market, fortunately, is in good shape. But as I talk to CEOs, they're probably expecting maybe higher than expected increases in wages. So too early to say, definitely going to have a cut this year. I think it's 50-50.
Well, we get another data point coming up on Friday with the jobs report, of course. Also want to get your take on the Fed. They did make one decision. They reduced the cap on their Treasury reduction. Was $60 billion, reduced it significantly. A lot of people view that as essentially easing in some ways. How do you take it?
Look, I think it's not meant to be easy in some ways. I think it's meant to be more of a reflection of maintaining adequate liquidity in the markets. But there's no doubt that it will have, an effect that will lead to some, easing your financial conditions possibly. And so, yes, I think it's working roughly in that direction. That's not their intention. And I wouldn't put too much weight on that as a contrary signal. That's not the way they're thinking about it. Their monetary policy tool is what they're using to signal and control inflation.
All right, Roger, we're almost out of time. Before we go, is there anything that you feel like that people haven't really caught up to when it comes to this press conference, the decision? You've been in these rooms. Is there anything that investors and other people just in the economy broadly should keep in mind about what we heard from Jay Powell yesterday?
Look, I think what people are often missing is the underlying strength of the economy is a very positive thing, and inflation appears to be stickier. And I think there's this general hope that, well, even in the face of that, the Fed's probably going to relent at some point. I think what people are missing is that 2% target is at this stage meant to be the 2% target. And 2% is not 2.5. So I think now we're going to be in a little bit of a disconnect where the Fed really pushing hard for that so-called last mile. And perhaps, I don't think it's likely yet, perhaps signaling that a soft landing may not be possible. And I think that's a little bit of the disconnect. People, I think, may be underestimating the commitment of the Fed to get to 2%. And I think people are thinking, well, they'll let it slide just a little bit because they don't want to crush the markets. And I think they're open to doing what's necessary to get to the 2%.